Hey, Archie, Warren Buffett is retiring, and I'm going to really miss his wisdom.
Rob, me too. Let's reminisce. I'm Archie Hoxton.
And I'm Rob Hoxton.
And this is Last Paycheck, weekly wisdom to help you retire and stay that way. Welcome back to the Last Paycheck Podcast, brought to you by Hoxton Planning and Management. We're your hosts, CFP professionals Archie Hoxton and Rob Hoxton. And today we've got a very special episode. We're talking about one of the all-time investing greats, just a legend. He has recently stepped down, so he's planning to step down. He's been in the news for that, and that is Warren Buffett.
Yeah, I just love the guy. He's been so successful, and he's got so much wisdom that he's shared, and there's so much of it out there.
Yeah.
That I think today what we want to do is just take a couple little shorts where he's given some great advice and review it with you and comment on it. And so should be interesting.
Yeah, he's really impacted so many people. He's inspired people to go and help people with investing into our field. And he's made popular, great investing principles. So we'll talk a little bit about that. This is just some of the financial advice that he gave that we found on the internet we thought was kind of cool and interesting, sometimes kind of funny. So we'll review that together. Let's go ahead and dive in.
I had a woman come to see me here not long ago, and she'd come on some money, not very much, but it was a lot to her. And she said, "What should I do with it?" And I said, "Well, what do you owe on your credit card?" She said, "Well, I owe X." I said, "Well, what you should do," I don't know what interest rate she was paying. It was something like 18%. I said, "I don't know how to make 18%. If I owed any money at 18%, the first thing I do with any money I had would be to pay it off. It's going to be way better than any investment idea I've got." And then later on in the conversation, she talked about her daughter, and her daughter had $1,000 or $2,000 or something. And she said, "Well, what should I do with the girl's money?" And I said, "Have her lend it to you. I mean, if you're willing to pay 18% or whatever, she's not going to find a better deal. I'll lend you money." It doesn't make sense. You can't go through life borrowing money at those rates. The world is in love with credit cards. But I would suggest to anybody that the first thing they do in life is don't be paying even 12% to anybody. Pay that off if they're really a good credit.
I love it. I love the humility too. He's fabulously wealthy, but he's so down to earth.
Yeah. He's not like these guys. A lot of these really wealthy guys that go on the internet and start giving this advice that's just completely disconnected from the average person's experience of money. This guy, he gets it. He hasn't forgotten that.
Yeah, I think he lives in the same house with the same wife that he's lived in for 50, 60, 70 years, drives the same kind of car, eats the same breakfast, loves to go to McDonald's.
Yeah, he goes to the same McDonald's right up the road, still drinks the same soda, loves Coke. It's like he's one of us.
Yeah, he is, except for he's worth, $75 billion or something.
Some insane number.
And he's giving it all away. But I love this advice. It's so right on. And we get this question all the time. And it's like, what should I do? Should I pay off this loan?
Mm-hmm.
And I think he does a fantastic job of saying, well, it's a 18% loan. I'm pretty sure, even though I'm Warren Buffett, the greatest investor of modern times, I'm pretty sure that I'm not going to be able to beat that.
Yeah. If Warren Buffett can't beat that, neither can you, right? I mean,
yeah. So pay off that credit card for sure.
Yeah. And the first thing I thought when I first, saw this video was, oh my gosh, this is really simple and seems like very kind of basic financial advice, but how often do we come up against this problem of oh, okay, I've got a little bit of extra money, and maybe it's not like I've got a windfall and I can pay off all my debt or I can invest it. Maybe it's like I've got an extra $1,000. Do I put it in my Roth IRA or do I pay off some debt? And then you have to come up against this question, well, what do the interest rates look like? Do I have a credit card with 18 or even 25% interest? Do I pay that off or do I invest it? It's like, well, you're probably not going to make 18 to 25% in your Roth IRA.
But yeah, I love how he also sort of pivots and says that the next thing that this person asks is, I have a daughter who has a couple of $1,000s they'd like to invest, and he's like, "That's great.
I just found the best investment opportunity.
maybe she can lend it to you at 18%, and if you're open to it, I'd be happy to do the same thing."
Hey, count me in too. I mean, 18%.
Yeah.
Yeah, that's a great deal.
That's great. Another wonderful bit of
unfortunate.
advice from Warren. So
It is. It's unfortunate that is the reality that many of us face is with credit cards. It's so important to be aware of what you're paying in interest. Now, if you're paying your balance off every month and you're just using it to, for your normal transactions, that's one thing. But if you're carrying the balance or using a credit card, for an emergency fund, another thing to do would be, okay, what do you do with, if you pay it off, maybe the next thing is like, okay, I still have some left. What now? It's like, okay, that's your emergency fund. That's what's going to keep you from getting a credit card balance again in the future. And then you start investing, right? So
Right.
I think that, if you were to take it a step further, just because it never makes sense if you can avoid paying 18+%, it never makes sense to use that money.
yeah, you got to walk before you can crawl, or crawl before you can walk, rather. And so you got to take care of the debt, then take care of the emergency fund, and then at that point you can begin to think about investing. And really, investing is a very much a long-term thing.
Yeah.
And debt managed correctly should be a fairly short-term thing.
Yeah. Aside from, something like
A
a
mortgage,
mortgage,
right.
and that's planned out properly. And then in that case, oftentimes a mortgage rate, depending on what the rate environment you're in is, oftentimes that's less than the average annual return on the stock market. So, you can justify that as well. Well,
We got another one?
we have another one.
All right,
and
another
we're talking
piece
about
of
long-term.
Warren wisdom.
Yeah, we're talking about long-term. This is more investing, and this is just great stuff.
Stocks are safe for the long run, and they're very unsafe for tomorrow. Berkshire, 3 times since I took over, has gone down roughly 50%. Did I feel poor then? No, not at all. I knew it was going to be worth more over time. American business is going to be worth more over time. That's what you're buying as a business. You're not buying a stock. You're buying a piece of a whole bunch of businesses. Are those businesses going to be worth more 10 or 20 or 30 years from now? Of course they are. But if you think you can jump in and out, or that the time to come in, I think you're making a mistake.
Yeah.
It was short but really dense.
Yeah, there's so much to unpack in his statement there. Golly. One of the ones I love is that, just the idea of investing in American businesses. When we went through this patch, and maybe it's not over, of real volatility that kind of came as a result of the sort of the tariff talks. A lot of people were very much focused on what was happening with stock prices, and I found myself, and you probably did too, Archie, in talking to them and trying to say, okay, let's not combine our worries, political worries, or whatever worries you may have with the markets and the economy. Let's keep focused on not what's happening necessarily right now,
Right.
but with the idea that when you're investing in stocks, usually you're investing in the greatest companies in America.
Yeah, predominantly.
And no one has ever succeeded betting against American companies, unless,
Not
of
for the
course,
long run.
yeah, not
Yeah.
for the long run. I mean, maybe if you're doing short-term trading and you got lucky, maybe. But in the long run, nobody has ever failed if they remained bullish on American companies. And Warren says it pretty nicely there. And he's true. He's right. And he's been doing it for such a long time and has had such great success doing it. But in the short term, it can be pretty dangerous.
Yeah, because the short term, all bets are off. Like anything can happen in the short term, and there's all kinds of strange things where the stock price goes wild. But it's like he said there were 3 different times in Berkshire Hathaway's history where stock price fell 50%.
50.
But he didn't He
But
didn't worry
I didn't
because,
feel poor, he
yeah,
said.
I didn't feel poor. He didn't worry. Why? Because he knew Berkshire was still Berkshire. It was still a great company. The people that made up the company were still great people. They were hardworking and determined. And that didn't change. And their ability to innovate and build the future of the company didn't change. The sentiment around stocks in general may have changed broadly. So that's where you have to focus. And another time he talks about, if you buy a farm,
Oh, yeah, yeah, I love this.
it's like, if you buy a farm and you're going to farm it and make some money farming that land, you're not going to have an appraiser come out, every day and appraise the land's value and, and then get worried about it and then sell it. That's crazy. You're doing something. You're building and creating something of value that, yeah, the sort of the tides of the opinions of others of what it's worth will change over time. But you know what you're doing. And when you're buying something like that, you're not worried about what it's worth today. You're thinking about, what is it going to be worth in 10 years? If it's going to be worth more in 10 years than it is today, it's a good investment. And I think the same can be said for American businesses. We are in so many ways the center of innovation and technology and just amazing companies and people, hardworking people. I mean, are these companies going to be worth collectively? And we're not talking about individual companies, because that's where things can get dicey too. If you're being diversified, collectively, are these businesses going to be worth more in 10 years or in 20 years than they are today?
Probably.
Yeah.
Yeah. Yeah, that's true. That's a good point. And one of the things that I love about this advice, the way he gives it, I mean, we're looking at a 94-year-old man,
Yeah.
and he has such a long-term vision.
Right.
That's right. That guy's still buying green bananas, no doubt about it. And
Yeah.
and he's really thinking in a multi-generational way. And for
Yeah.
many people and many of the folks that we work for, while they are very much concerned with how are they going to replace the cash flow that they had in their working years once they've retired, the reality of it is that most of the people we work for, and this is probably true of many of you watching this, you're probably not going to spend your last dime before you pass away. So to a degree, you need to have a long-term view.
Right.
Maybe a multi-generational view, because chances are you're not going to spend everything. Something's going to get passed on. And even if you're living in your 90s, you still need for your assets to grow at a rate that outpaces inflation.
Yeah.
Right? Nothing does that quite as well as investing in America's best companies.
We always say that the hardest thing about that, though, is that we experience life through that short-term lens. Mm-hmm. It takes a lot of discipline and, it takes a lot of discipline and patience to continue to invest. Okay, I'm investing for the long term. I need this money to last the rest of my retirement. Maybe I've got a 30-year retirement ahead of me, or maybe I'm most of the way through. Maybe I think I've got another 10 years. You still have to have a long-term view, because a lot can happen in 10 years. The problem is we experience it in the short term. And so
think of it like this, life as a race.
Yeah.
Right? So you're in a competitive situation, you're in a race, you can see the finish line. We all know that there's a finish line for all of us. We're not getting out of this alive.
Yeah.
But we know that the finish line is up there. If we, let up and slow down before we get to the finish line, we're going to get past.
Yeah.
Right? And the same thing is true with investing. You've got to be able to maintain your portfolio for some degree of growth to outpace inflation. If you stop and you don't know exactly where the finish line is, you may not get there successfully. So it's true. We all have to have somewhat of a longer time horizon than, a lot of people when they're working, they think my time horizon is 65. No, if we are healthy, our time horizon is at least through the end of our life, and you can't just stop before you get there.
Well, yeah. Well, and there is often a misconception that you invest, and then when you retire, you no longer invest. You have a big pot of cash. Some people can afford to do that, but most of us cannot. You have to continue investing. You invest different in a different way. You take a lot less risk, and you're more mindful of volatility.
Right,
You're more
less
diverse.
volatility.
Yeah, you want to be very diversified. But yeah, I mean, it's the beginning of a different leg of the race, I would say, or a different type of race. And so you have to keep going. So anyway, and these are all things that Warren Buffett has talked about over and over again throughout his career, and he's helped people think about investing the right way. And it's funny because even though he invests in a very, very different kind of way than your typical American who's planning for retirement, those principles that he got from Benjamin Graham, another great investing legend, and then were used in his own career, those principles apply for all of us.
Those rules have not changed.
Yeah. And be really careful if you decide you want to break them. You might break yourself against them.
Yeah.
So
That's right.
yeah.
Good
Well,
stuff. We've been very fortunate to have Warren Buffett show us the way for so many years.
Yeah. Great legend there. Well, I think that's about all we have time for today. So we hope you enjoyed it. If you liked the video, remember to hit the thumbs up, subscribe, leave us a comment if you have thoughts or questions or an idea for an episode you'd like us to do. Share it with your family and friends, and we'll look forward to seeing you next time. You've been watching Last Paycheck, weekly wisdom to help you retire and stay that way. If you like this show, be sure to hit like and subscribe. Last Paycheck is available anywhere you get your podcasts.